Welcome everyone to the Roy Morgan Weekly Update. Support for the Labor government remains strong, up 0.5 percentage points to 55% on a two-party preferred basis, and government confidence is up 3 points to 110. To some extent, last week saw the return to relative normality after the official mourning period for Queen Elizabeth ended in most of the country. The major story of the last few days was the Optus Data Breach, which has dominated news stories over the last week, with over 9 million customers potentially having their data stolen. But more on the Optus story later. The real story is mortgage stress, which is increasing each time the Reserve Bank raises interest rates. Turning now to the key weekly indicator of consumer confidence, as global market turbulence increased last week and the Australian dollar plunged to below 65 US cents, consumer confidence has taken another hit, down 2.3 points to 85.5, its lowest since late August. And inflation expectations rebounded to 5.6%. Every week, Roy Morgan asks Australians what they expect inflation will be annually over the next 2 years. As we suggested a week ago, after the indicator fell to its lowest reading in months, the return of the full petrol excise last week was likely to see inflation expectations bounce back quickly, and that's exactly what happened. On a weekly basis, inflation expectations rebounded to 5.6%, up by 0.6 percentage points, reversing the previous week's fall. And over the next few weeks, it'll be interesting to see whether the return of the petrol excise and other economic pressures causes inflation expectations to rise or fall. The next CPI reading for the September quarter is due from the ABS in just over 3 weeks, on October 26, 2022. One of the most closely watched indicators this year has been ANZ Roy Morgan Consumer Confidence by housing status. The figures this week show consumer confidence down for homeowners, people paying off their homes, that's mortgage holders, and renters last week. And all are down since the Reserve Bank began to raise interest rates in early May. Unsurprisingly, the largest falls have been for people with a mortgage, down by 16.4 points to 85 since late April. Now, these figures are obviously before the Reserve Bank's meeting today, so next week we'll be able to assess the impact of the Reserve Bank's latest decision on interest rates and how it affects the consumer confidence of people in different segments of the housing market. Before today, the Reserve Bank had raised interest rates at 5 straight monthly meetings by a total of 2.25% to 2.35%, taking interest rates to their highest for over 7 years, since February 2015. The Reserve Bank's decision today to raise interest rates by a further 0.25% to 2.6% now takes official Australian interest rates to their highest for over 9 years, since August 2013. The highest interest rates in nearly a decade will put further pressure on people with a mortgage. However, the smaller increase than many expected shows the Reserve Bank is closer to the end of this hiking cycle than the beginning. Regardless, Roy Morgan will be watching our key indicators over the next few weeks. You might recall a special Roy Morgan survey on mortgage stress released in September showed over 1 in 5 Australians with a mortgage already face mortgage stress. And if interest rates increase to 3.35% later this year, around 1.1 million Australians will face mortgage stress. Almost 1 in 4 Australians with a mortgage. Another key indicator we watch is the monthly Roy Morgan Business Confidence Rating, how businesses are assessing their future. There was good news in September, with business confidence increasing by 4.7 points to 100.7. This means it's marginally in positive territory, above that neutral level of 100, where more businesses are positive than negative. This is the highest business confidence for 5 months since April 2022. Business confidence had plunged in May after the Reserve Bank began to raise interest rates. And the picture on a state-by-state basis, We see business confidence is highest in the two largest states of New South Wales at 108.9 and Victoria at 108.5. The strong ratings in these two states, which comprise more than 55% of the Australian economy, is good news, although it is concerning that business confidence remains low and in negative territory, i.e. below 100, in other key states, including Queensland, Western Australia and South Australia. A look at confidence or business confidence by industry, how different industries feel, shows industries that have benefited from the country opening up and the relaxation of pandemic restrictions have the highest ratings. Education and training is the most confident industry at 127.9 after international border restrictions were relaxed and international students have been allowed to return. In second place is accommodation and food services, which has enjoyed bumper results in recent months after Australians were allowed to travel again. The ski resorts in New South Wales and Victoria are already reporting a record ski season for holidaymakers. The other big winner is the mining industry, as key resources like coal and natural gas have been in strong demand this year, especially after Russia's invasion of Ukraine. And finally, Optus. A special Roy Morgan SMS snap poll this week asked which telecommunication companies Australians trust and distrust, and importantly, what worried people about the data breach at Optus that's impacted over 9 million customer records. We'll be releasing the detailed findings this week, but here are a few key insights. The Optus data breach has made Australians more alive to the risks of data piracy and privacy than at any time since Cambridge Analytica harvested 50 million Facebook profiles in 2018. When asked directly what worries Australians about the Optus data breach, Australians gave lots of detailed answers. Lots of answers. Just a few are: breaches are always happening with large companies. It worries me that companies do not take more responsibility to compensate for losses. Confidentiality and privacy are gone. The rights of the individual are gone, and our identity's been reduced to digital data. The ease with which data was stolen and why they store all those details once you've proven your identity. Totally unnecessary. Very poor of them to do that. How little responsibility Optus has taken for the breach. And we're worried that the fact that Optus won't be held accountable or suffer any real consequences after being so cavalier with people's information and privacy. The apparent ease with which corporate and individual digital security precautions can be overcome. Victims that the personal data relates to will forever be at risk of identity theft, as the genie can't be put back once the data's stolen. So after a very eventful week, that's a wrap. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening, and I look forward to joining you again next week when we'll have the latest data on consumer confidence, inflation expectations, voting intention, and the latest monthly unemployment and underemployment figures. Take care and see you next week.